Are we ready to rumble?
Let's do it.
It's going to be fun. Okay. Oh, and futures just died. Goodbye. Good night. What's going on today is going to be interesting. What we're seeing, what we actually saw, I think, is a prime case of market manipulation pre-market just now. What you had going on is a positive unemployment number. We were a little bullish on the number, and you had a rate that went from a 9.4 adjustment to a 9.7. So they said, less people really jobless. Oh, no, we meant that the overall number got worse. So why does this matter? Last number, if anyone remembers back last month, what you had was the opposite. Unemployment data was a little worse, but they adjusted from a 9.5 to a 9.4. And when they did it, the market exploded because everyone said, ha, everything is going to be better. Well, now we're going to see if the market takes the opposite piece of that logic and says, ha, everything is going to be worse, right? Because the reality is everything's going to be worse. So now that we've seen what the market can do, let's talk about what the market actually did in reaction. First, the market sold off. So it fell from, futures were up 5 before the number, fell to basically flat, which is the pivot today. Stayed there for 30 seconds or so, and then they ripped. And they kept on going, and they took the number nearly up to the top part of the range where we expect it has room to even try to go, which is in that, give or take 109 area, 1009 area on the S&Ps. Right, on the Dow, that would be also at 94.21 actually is the half a candle from last high, 94.11, that range, 70, 80 points on the Dow is where we have room to go on the upside. And they ripped it, which was a perfect shorting opportunity for everyone or anyone who wants to take advantage of that into that move. So what's going to go on today? Good question. For starters, market's going to be thin. You could throw a rock in New York City and hit nobody today. Everybody's on vacation. This is their extremely busy week, an unbelievably busy weekend. The Hamptons are filled with Wall Street this weekend and with New Yorkers. And most of them left yesterday. So only the fools or the poor are still there today. And even the fools and the poor by this afternoon will also be in the Hamptons. Just instead of by helicopter, they'll have gone by bus. So the market is this afternoon in the market. I'm not telling you there won't be any volatility, but it's going to be really, really, really light in terms of volume because there's not going to be a lot of people around trading except for the Floridians. So what we're looking for this morning, at least where we're seeing certain things, is going to depend on where the futures actually base off the open. We keep hitting this pivot, which is about 1,001 on the futures, and we're kind of holding that. So the odds are we're going to get one leg up on the move, somewhere halfway between where we went before and where we are now, maybe 1,005, that area. That's where I'm going to start shorting again. Right? I'm already a little short. I was a lot of short. I covered. I'm a little short. I'll get short more starting in that range. I know that my out would be if by some chance they started bringing it above the highs of the last move, above the level that I thought we can get to, that 1010 roughly number, or 1,009. If it keeps going to that, I will keep shorting all the way into that, because what's worked this whole month has been to short rallies. You've gotten a lot of reward if you shorted rallies, much more than if you bought dips. A few days if you bought the dips, you were the dip. So now we're going to short these rallies. We're going to look for those great moves. Look for the spikes, especially the spikes. Right? Spikes are a reaction to something. They're not a market sentiment. It's just a reaction. And any reaction has often has a counter reaction. So I want you to start looking for that. Look for the move up, spike, and sell into it. On the downside, let's say this market can't go. Where do we have room? Well, the first piece of room we have is to see where we were. What are we, 92.52, give or take? That's the first piece of room we probably have some support at. So if the market decides to die, just like there's 80 points on the upside, there's about 80 or 90 points on the downside as well. If the market, for some odd reason, I don't expect it, because I expect this to be fairly range-bound within that large range anyway. If the market can't hold that, we've been saying all week that 91, 22? 91.22, 33. 91.22, 33. 91.33 is really, the next major level of support. If we had a few down days, we expected it to have gone there, right? So again, we see where we can go on the downside. On the upside, the odds of us going really any more, above the point we just discussed, it's fairly slim, right? So, from my standpoint, I'm handicapping the short side because that's where I see much more potential. But I am taking profits. I'm taking moves and I'm taking profits. It's a thin day. And in a thin day, you need to be on both sides. You need to send out orders. So if you want to, because sometimes they'll spike something down or spike something up, if you're out there, you've got a better chance of getting hit. Okay, so we're going to give you Eve now.